For example, this market, as you can see here, is going down. So what happened when market change direction to an uptrend? Then, for example, as you can see here, this market is going up. So what happened if market change direction to the downside? So this is what we are going to cover in the mentorship 4B right now. Before then, let me explain the market structure in an uptrend clearly so that you can understand much more better. Because I always tell you that from this sketch, it is easier for you to understand anything about market structure, right? But this is not how markets really move. When you get to the chart, you notice that it is the chart looks more dynamic than the sketch, right? Although the market itself is not dynamic, but from the look, you can see some minor movements that happens while market is moving in a particular direction, right? So this might confuse you sometimes to identify market structure properly. So let me use trend line to better break it down for you. So there are rules behind market structure, and that rules is for a market to move from higher low, which is this point here, right, to another higher high, which is this point here, it must break the previous higher high, right? It must break the previous higher high. And for market to move from a lower high, which is this point, to print another, lower low, it must break the previous, you know, lower low, which is this point here. So let me use trend line. Look at this and look at this. So this is what we call break of structure. This is what we call break of structure. So for market to continue moving in the same direction, it must break a structure. And the structure is the previous high or previous low. So when we are in an uptrend, for market to continue to go up, it must break the previous higher high, which is this point here. Then when we are in a downtrend, for market to continue to go down, it must break the previous lower low, which is this point here. Okay, so if you are on a lower time frame, like 1 hour below, 1 hour below, the body of a candle must go above the previous higher high for you to have a valid break of structure. A valid break of structure. Valid break of structure. BOS. That is break of structure, right? So for you to have a valid break of structure on a lower time frame, anything from 1 hour below, yes, anything from 1 hour below, this is a 1 hour, right? But now we are on 4 hour. Anything from this 1 hour, 30 minutes, 50 minutes, 5 minutes, these are lower time frame. Anything below that time frame, okay, the body of a candle must close above the previous higher high for you to have a valid break of structure in an uptrend, and the body of a candle must close below, you know recent lower low, which is this point here, for you to have a valid break of structure in a downtrend. So let's say, okay, let me give you an example on chart. So we can see this market is in a downtrend, right? In a downtrend. So for you to have a valid break of structure in a downtrend, all right, you can see the break of structure, right? And this is another break of structure, okay? And this is another break of structure in a downtrend right here. Okay, can you see it? So this is 4 hour time frame, right? Is a higher time frame. So if a wick of a candle break the previous lower low, which is this point here, this is our previous lower low. If the wick of a candle break that low, we can consider it as a valid break of structure. So when you are trying to mark your previous lower low, you mark the wick of those candle, not the body of the candle, right? You mark the wick, which is this point here. You can see how I draw my trend line, which is this horizontal line, red. So I mark the wick of it, not the body, as my previous lower low. Okay. Also, if you are in an uptrend, you mark the wick of the candles as your previous higher high, right? But when you are looking for a valid break of structure, now you start looking for where the body of a candle go below that recent lower low that you marked. Okay, let me go to 30-minute time frame again so that we can check where is our cycle. Okay, you can see this is our cycle, right? This is our cycle, right? So now we can see our recent lower low, right? And here at this point, you can see a body of a candle close below the what? The recent lower low, which give us a valid break of structure, right? But this particular break of structure, it is only valid. It is only valid on 30-minute time frame. I think this is 30-minute time frame, right? You're on 30-minute time frame. Yes, this particular break of structure, it is only valid on 30-minute time frame. All right. That is why you see some people go and learn different strategy. They watch everything, they understand everything, they practice the same way the mentor is practicing, but still they are struggling to get it right. Why? Because there are some important details that those mentors don't explain to you, and not because they don't know it, but because they want you to discover it on your own. They want you to build the experience on your own, right? Which will take you more time to actually understand the market. Every single details that you need, I'm breaking it down for you, and that is what makes this mentorship quite different from any other mentorship that you know out there. We don't give you, something that you start guessing how to implement or how to do it properly, how to apply the strategy or the system properly. We break down every single details in the strategy and in the system for you to know it, understand it, and start practicing it immediately. So, my mentorship is like an instruction. So, like I said, this breakup structure it's only valid on 30-minute time frame. It is on 30-minute time frame that it shows us what a valid breakup structure. And what's a valid breakup structure? Is when a body of a candle close below the recent lower low if you are in a downtrend, and if you are in an uptrend, when the body of a candle close above the recent higher high. Now look at this here again. We have this body of a candle still on this time frame. When this price get to this point here, only the wick break this low. Can you see it clearly? Can you see it? Only this wick the wick of this candle here break this low, and on this time frame, this is not a valid break of structure. When we have a valid break of structure was when this price come down here and a body of a candle now close below this recent low here, and this is our lower high. Okay, so let me go back to um 1 hour time frame. Okay, let me go back to 1 hour time frame. Now this is 1 hour time frame, right? And this is what we explain right now. If you didn't get a valid break of structure, there is no way you can actually determine the change of market direction until you have a valid break of structure. So let's look at uptrend. Okay, this is a very clean uptrend. We are on 1 hour time frame. Okay, look at this very clean uptrend, right? This uptrend here, we have our recent, higher low, recent higher high, higher low, 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 you know, higher high, right? Then higher low, then equal high. Okay, then equal high here. Why is it equal high, not higher high? The reason why is because we have a wick of a candle that go above the recent higher high, not the body. Had it been the body of this candle close above this recent higher high, we would have considered this high as our next higher high. So what we have here is equal highs. This is not higher high. All right. So now, where is our valid break of structure? This is our valid break of structure. Here we have break of structure, very valid. Then we have this one, mark this week, and you can see, make sure your trend line is very straight. It's aligned with the dash line. You can see if I'm moving this trend line, do you see dash line that follows the trend line? So get it aligned. Aha, perfect. Valid break of structure. We have another valid break of structure here, right? I hope the class is getting interesting. Now we have another break of structure here, very valid. Oh, let me align. Okay, I'll align it later. Okay, and here again, you can see we have our valid break of structure right here. Let me align this one. Yeah, I've aligned it perfectly. So guys, you can see this is our valid break of structure right here. Valid break of structure, BOS. This is our valid break of structure, BOS, right? And this is our next valid break of structure, BOS. Okay, and this is our next valid break of structure continuously. Okay, this is our next valid break of structure in an uptrend, BOS in an uptrend. Okay, now can you see how clean this structure is? Why is this a valid break of structure? Because a body of a candle close above the recent higher high. The same thing here. When price gets to this zone here, we did not have break of structure yet until this candle, this bullish candle here, close above the recent higher high. That is when we have a valid break of structure. The same thing here, a body of a candle close above it, break of structure, valid one. The same thing here. So after we have a valid break of structure, market print a new higher high. And what do we expect next? After printing a new higher high, we expect market to print a new higher low, which is here. This is our higher low. 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 Right now, when market prints this candle here, the candle close above the recent higher high here, right? Then continue to go up, go up, go up until it gets to this level here, then pull back again, right? After pulling back right here, we have our what? Higher low. Then market go up again to break this recent higher high, right? To give us another higher high, right? So the rule is for you to have a valid break of structure, right? Market must print higher low. Market must print higher low. And the market must break the recent higher high. Okay. Market must print. Market must print higher low, HL, and market must break the recent BOS break of structure. So these are the rules to define a market structure, right? So now let's say you want to use trend line to identify your valid market structure. Now I take this my trend line. The first thing I'm going to do is to draw from the first higher low, which is this point here. This is the first higher low, right? Then I move it up, right? I move it up. I'll move it up like this. This is how to draw trend line now using these conditions. You want to use trend line now to define a valid market structure using these conditions or rules. Now, by the time I mark this first higher low, I'm going to look for my next, you know, higher low, which is this point here. Okay. Then I look for my next higher low, which is this point here. This is this point here, and this point here, and this point here. But based on the behavior of the market, those points are not equal. So if I pick this point, this is where my trend line will be. If I pick this point, this is where my trend line will be. It will be like this. If I pick this point, my trend line will be like this. Okay. If I pick this point, my trend line will be like this. And if I pick this point, my trend line will be like this. So how do I draw this trend line properly? Number one is when you are picking a point, which is your recent higher low, you are looking at the body of the candle, where the candle close, where the candle close. This point, this is where the candle close, and this is where the candle close. This is where the candle closes. This is where the candle closes. You are not drawing from the wick of those candles. You are drawing from the body of the candles where the candle closes. Like this point here, that's where the candle closes. Like this point here, not this wick. Can you see it? Not this wick. I'm not drawing from this wick like this. Yeah, I'm not drawing from this wick like this. Not. I'm drawing from this body like this. Okay. I'm drawing from this body like this. So now, let's say when I'm drawing my trend line, I already have this valid break of structure. Then after having the valid break of structure, market come to this point here. When the market is at this point, I don't rush to decide that this point is our new higher low. I only decide until market break the recent higher high here. When market break the recent higher high here, that is when I'll say, okay, this is my valid higher low. Then if I want to draw my trend line, I now pick it from this body of the candles here, then align it with the body of the candles here, right? Then I draw it like this. Okay, so let me move the first line here so that it will not confuse you. Now, from the body of the candle here to where I have my valid higher low here, then I wait for market to pull down again. When market get to this point here, right, I did not decide yet that it is a valid higher low. I wait until market break the previous structure here. Once it breaks, remember, I'm following the market live. I'm following the market live. For example, okay, so now after getting this valid higher low, the market go up and break this higher high. Then I have a valid higher low again. Then I move my trend line back to this point here. This new higher low. So I'm no longer considering this higher low anymore. That is how you draw trend line perfectly. I'm no longer considering this higher low anymore. My next target is this new higher low that is valid. Why is it valid? Because market close above the recent higher high here. So this is how I follow the market. Why is moving, moving, moving. Now, for example, market get to this zone here again. Then I wait until it gives me a valid break of structure, which is this point here, go up and close above this recent higher high. When market close above this recent higher high, now this higher low here becomes a valid higher low. So look at this. When market give us a new higher high here, come down here, buy to this point here. So this is not a higher low because when market get to this point here, it doesn't go up to break the recent higher high. Then it continues to come down here. It was after market come down here that it went up to break the recent higher high. So we don't consider this as our valid higher low. It is an internal structure. So we don't consider it as our valid higher low. We consider this zone here as our valid higher low. So next we move our trend line like this. So this is how you know when markets will retest a trend line. This is how you know. Now look at this one again. What happened after this break of structure at this point here? We have another valid higher low here. Market come down, retest the trend line, then go up again to break this higher high. Okay, fine. So you can see if I'm trading trend line, break and retest. All right, this is how to get my break and retest strategy by following the market while it's moving up. So now when market break this recent higher high here, come down here, print this low here, and this low again go up and break this recent higher high. So I'm no longer looking at all these valid higher low here anymore. I'm looking at the first one which is this, and the last one, which is this one, which is the last one here. This is the last one. Okay, so I'm looking at this. Then I now draw my trend line here like this. I'll now draw my trend line like this. So now my main focus now is the first one and the last one. I'll ignore all of this valid higher low and pick the first one and this last one here. You can see that we still have another break of structure here. Please, if you have questions, drop in the community, right? Drop in the community if you have any question. Okay, so you can see we have another valid break of structure here, right? So I can even say it, okay, this is my second to the last and this is my last, you know, valid higher low. Then I point it here like this. Okay, then I point it here like this. So if I'm trading break and retest, when market come down and break below this my trend line and a candle close below it, then I now wait for market to pull back after breaking like this. I wait for it to pull back and retest my trend line. Then I sell it down. If I'm trading break and retest. Okay, so that is how you trade break and retest. But I'm just giving you this example so that you can understand how to mark a valid market structure or how to define market structure professionally. So when I have this swing highs, the most important to me right now is this first one and the last one. So how do I know the last one? Since the market already formed, I can just draw my trend line. Let's say I'm trying to backtest. I draw this first point here, which is our higher low here, then take it direct to the last one, which is this one here. Then I wait for when market break the trend line. Okay. Okay, that is when I can now say the market is trying to change direction. When market break my trend line to the downside, if I'm in an uptrend, and if I'm in a downtrend, when market break my trend line to the upside, that is when I can now say, okay, market is trying to change from downtrend to uptrend. But for example, this particular one you are seeing here, market is already in an uptrend, and we want to know what determine the change of market direction. Now we are using trend line. So, and this trend line actually helps you to define valid market structure. Valid, because when you missed a point, you are not going to get a valid entry. So that is why I'm trying to explain to you how to get your point right. How to get your point right. So let's come down to here and see. Now, look at this. Just from this point here to this point here, we have a bearish market, right? Market sell down here. Or let me look for the longer one that can give you a very particular example. Let me look for the longer one. Or maybe because I don't want the video to be long, we can just use that one because the structure is very clean. You can see our higher low very clean. Okay, we want to use this downtrend example, right? So we can see the structure is very clean. This is our lower high, lower low, lower high, lower low, right? Lower high, lower low, right? Lower high, then the final lower low here. So if you want to determine a valid market structure, we now mark the wick of this candle here, the wick of our lower low, Then we wait for price to come down and break that lower low, and a candle must close below that lower low. Very fine. We have a valid break of structure. Again here, we mark the wick like this. We mark the wick like this. All right. We'll mark the wick. Wait for price to come down and close below it. Now we mark the wick again here. Wait for Then we wait for price to come down and break it. Now look at it here. Price come here, break it. We have our valid break of structure in a downtrend. BOS in a downtrend. And here we have our valid break of structure in a downtrend. BOS in a downtrend. And here again we have our valid break of structure in a downtrend. Okay, valid break of structure in a downtrend. So why are you marking the break of structure? Because the break of structure tells you whether market will continue to go in the same direction or it will change direction. For example, this is a downtrend, right? This break of structure tells you whether market is going to change direction from going down to going up, just like what we have here, right? So let me bring it like this so that we can clearly see it, because I'm going to use this particular chart to explain everything about market structure. Okay, now we have our valid break of structure in a downtrend here. So basically, this is our lower high, lower high. Now remember, in an uptrend, I was focusing on higher low, because those are what determine the continuation of a trend. And in a downtrend, your lower high are what determine the continuation of a bearish trend. All right. The lower low only tells you or validate your structure. The lower lows, it validates your structure, which gives you a valid break of structure when price come down and close below it. That is the importance of your lower low in a downtrend. But your lower high determines the continuation of the trend. All right. So if I'm going to draw my trend line now, I'm not drawing the lower low. I am drawing on the lower highs, which is this. This is the first lower high. This is the second one. I'll draw it like this. Okay. Draw it like this. If I have new break of structure, which is a candle close below this lower low here, I'm no longer focusing on this one. I move to this next one, because after having the break of structure, market pull back and print a new lower high, right, which is this point here. Then I draw my lower high like this, put my trend line, and wait again to have another what, lower high. So when market break this low here, this low here, market break it, this becomes a valid lower high. Then market pull back again, come to this point here to print our new lower high. But this lower high is not valid until price come down and break the recent lower low, which is this zone here. So when price come down and break the recent lower low, okay, then this zone now becomes a valid break of structure. So now I'll now look at this as my next valid lower high. Then I'll draw my trend line like this. Okay, then I draw my trend line like this. Okay, focusing on the body. Okay, now the next thing is I now wait for market to give me another lower high. All right, then lower low. Now market get to here. I did not conclude that this is my new lower high yet until price come down. Right, price gets here, until price come down like this and break this lower low, this recent lower low, and look at the wick here. Look at the week. So I'll now draw my trend line like this, for example, waiting for price to come down and break it. And this is where I want the price to break this from this week. Can you see the week? I draw it like this. Now I'm waiting for price to come and break it. If price come down and break it, I have my new what? My new what? Lower high, valid one. Then what happens next if price refuse to come down and break it? That means price will be targeting your trend line to break your trend line. Okay, price will be targeting to break your trend line. Okay, now price now come up here and break my trend line. If price break your trend line without giving you a new lower low in a downtrend, that is when you start expecting change of market direction, right? That is when you start expecting market to move from bearish to bullish. So if you are using trend line to define the structure, then you wait until the price retests your trend line, just like what happened here. Now price refused to print the new lower low, right? So it went up, break the trend line, then come back and retest the trend line. This is the trend line we have. So why is this trend line valid? The reason why is because when market was coming down, I was taking note of the lower high, another lower high, another lower high, right? Then this is my last lower high because this is the last lower high that printed this lower low. And after this lower low, we didn't have another lower low. So this becomes my last lower high, and this is my first lower high. So I ignore the previous valid lower highs because mainly if you are looking for a change in market direction, you are looking for the first, you know, lower high and the last lower high in a downtrend. And in an uptrend, you are looking for the first higher low and the last higher low in an uptrend. Please take note of this very well. Now, this is the first one and this is the last one. Now, I'm not drawing on these ones anymore. Now, so now price now come up, break my trend line and come down and retest my trend line. So I can now take my entry from here if I'm using a trend line to define market structure. So now this is my entry zone and I'll take my buy from here. Okay, set my position like this. Okay, this is a buy position or long position, anyhow you want to call it. Then I set my target, this high here, and then I'll wait for price to unfold. And you can see from that zone where I have my break above my trend line, come down and retest my trend line, market bought and continue buying. Can you see this? I hope this thing is becoming clear to you now.